All right, we've got less than 15 minutes till market opens. Um, I did trade yesterday, but my mic died, so I didn't get to post it. But I lost the trade, took a short within a 15 and 30-minute bearish fair value gap. Price also created an SMT divergence in that zone, and then I entered off of a 3-minute inverse fair value gap. The trade did end up carrying out after 12:30 p.m., but that's a little bit after we would even consider entering. So I left it at that. But for today, the way I usually start, which is very important, is to mark all the high time frame confluences, right? So I marked this 4-hour bearish right here. I marked this 1-hour bearish right there, this 1-hour bullish, 1-hour bullish inverse, 1-hour bullish inverse. And, this is to help us get a macro understanding. But remember, although for my strategy, my high time frames that I will even look at are the 1-hour and 4-hour, always make sure that every once in a while, actually every day, just take a peek at the 1-day. And when you do, what do you see? You see the most clear bearish fair value gap right here that we have just entered on the 1-day, right? So candle 1, candle 2, candle 3, price is perfectly at that 50% range within that fair value gap. Once you see that on the 1-day, sure, right, price could continue higher and get a deeper retracement within that bearish fair value gap and almost treat this candle body as an intermediate for tomorrow's trade, right? And then maybe tomorrow we'll sweep this 1-day candle and then continue bearish, maybe something like sweeping that, still being within that bearish fair value gap, and then continuing our downtrend. It's possible, but it's important to keep in mind that what if we continue higher, it's a valid what if, but you need to, what matters more is the current market state, right? And then drawing down to the lower time frames, like 4-hour, 1-hour, 15-minute, if those time frames are giving you reasons to take a short position, if it's confirming what we're seeing here, even though the 1-day hasn't finished, then it's probably a better idea to trust what you're seeing, right? That we're within a bearish 1-day fair value gap. And to a lot of people, that might seem too simple, but simplicity works, all right? So we see it on the 1-day. What I would like to see is we have this 1-hour very clear bearish fair value gap right here. And we have this wick on the 1-hour, the 8 a.m. candle that we could manipulate. Okay, we could manipulate, enter this bearish fair value gap, and then continue our downtrend. Something like taking out this high, entering that bearish fair value gap, maybe something like that, and then continuing our downtrend. I don't know. So that's a possibility, right? What I do want to draw out is the Fibonacci tool. And I'll use this, sparingly, but this seems like a pretty good case to use it. Only reason I'm asking is because we have a clear bearish downtrend. We have a clear reversal candle, temporary, right? Or a retracement candle. This bullish 2 p.m. candle right here on the 4-hour. So that's where I'll use, I just want standard Fibonacci. I can't get that. I'm not sure why I can't get that. Let me try to figure it out. Okay, look. Start of the downtrend, bottom of the downtrend. Price is currently perfectly sitting in that 50% and 61.8% range. When price is sitting in that range, that basically means there's a high likelihood for it to continue in the dominant trend direction. And the dominant trend direction is subjective to which time frame you consider. So if I'm looking at the 15-minute time frame, the dominant trend is bullish, You see that? But if I'm looking at the 4-hour time frame, the dominant trend is bearish. So if we're using fib for the 4-hour, the dominant trend would be bearish. So price is currently in that perfect golden zone for us to just absolutely reverse, right? And substantiated by the fact that we're within a 1-day bearish fair value gap and we're resting right below a 1-hour bearish fair value gap. Honestly, even if we don't enter that 1-hour bearish, I'm still looking for confirmation to take shorts. Okay. And look, it's possible for Fibonacci to make deeper retracements into the 70% range, but like it's less likely, okay? There's a reason the statistical probability of 50% and 61.8% range carries out, okay? Because it has more influence. So we have that 5 minutes till market opens. Let's check the 1 week. I'm just curious. All right. Yeah, look, 1 day, very clear. Technically, this would be considered an intermediate high right here. This is a 4-hour bearish. Check the 1 hour. We have a 1-hour intermediate high right here from this bearish fair value gap. It's like 30-minute and 15-minute now. 30-minute time frame. It's a time frame you don't want to depend on a lot, right? Because most people trade the 5-minute and 15-minute, not the 30-minute. 30-minute is an interesting time frame because it's not high enough for the high time frames like the 1 hour and 4-hour, and it's not like low enough for 5-minute and 15-minute. 5-minute, 15-minute isn't even a low time frame, right? Low time frame is like 1 minute, 2 minute, 3 minute, but 5 and 15 would be considered a middle time frame, and 30-minute is just not really low enough for that. But I like using 15-minute and 30-minute in tandem because I find that if there's like a fair value gap on the 30-minute, there's often an intermediate on the 15-minute. So that is just like something in my strategy that I like to incorporate, is using 15 and 30-minute together, just kind of bouncing back and forth between them. And a lot of times I'll see something that I wouldn't have seen otherwise. Or I would have seen it on the 15-minute, but it wouldn't have been enough information to just see it on the 15-minute for that to influence my decision in either taking or not taking a trade. So 30-minute, we have this intermediate low right here, but we already have a bullish fair value gap mark, so we're not even going to worry about that. Let's check over here. See, I'm not seeing anything on the 30-minute today, so we could just leave it at that. Yeah, I mean, this 30-minute bearish fair value gap right here, but this would be this got inverted, right? This bearish fair value gap got inverted by structure right here, so this would be considered a inverse fair value gap, a bullish inverse. But we already have this regular bullish fair value gap mark, so we're not just gonna chart it for no reason, right? You don't want the chart to look very cluttered. Let's look at the 15-minute now. Okay, so we're in a 15-minute bullish fair value gap right now. That's our 15-minute bullish. I would think that if we invert this, we could take shorts, right? We could take shorts. I'm trying to look at the market now in a way where we're not considering the 1 day, because like I mentioned before, although it's important, I don't want just seeing the 1 day time frame, knowing that we're within it, for it to influence my entire decision making for today's trade and just being stuck on the fact that I need to take shorts, because that's not the case, right? That candle body hasn't even finished. The 1 day time frame hasn't even finished. That 1 day candle could slam right through the second candle in that fair value gap sequence. So we just don't know for sure. So that being said, if I just look at the 4 hour and 1 hour, we're closer to 4 hour confluences, right? The closest 4 hour one on the sell side is up here. The closest 4 hour one on the buy side is right here, this intermediate low. Okay, we're also on the 1 hour closer to, the buy side rather than the sell side. Right, this is where price currently is. This is buy side, this is sell side, about the same. But I think the fact that we're in that 1 day bearish and we're in the Fibonacci 50% and 61.8% range, those two factors are truly making me believe that, we're taking shorts. But now's a good time. I mean, we have less than a minute till market opens. Should have done this a few minutes sooner, but let's just look at the 4 hour on ES, and we're going to look for any SMT divergences. Okay, I mean, a very clear one is, sure, we still have to wait 30 minutes for this 4 hour to finish on this candle right here, but ES has not taken out the previous day high, whereas NQ has. Now, if you look on the 1 hour, that's already happened, right? Like, NQ has taken out this this high right here, this 4 p.m. high, whereas ES is also taken out the 4 p.m. high. Yeah, both have. But I guess the main thing is ES hasn't taken out previous day high, whereas NQ has. Let's check 15-minute on both. Yeah, they're in sync. They're for sure in sync. See, like, seeing these bullish confluences doesn't necessarily mean that price is going to reverse at them. It could just mean that it's going to fill all of that liquidity and take out this intermediate low right here. That's what I think there's a decent chance of happening. So, like, once this 15-minute candle body finishes, I'm going to wait for that because that's the highest time frame bullish fair value gap that I see. Sure, I'd see it on the 5-minute as well, right? I could wait for this 5 minutes to finish, but no, I see a bullish fair value gap on the 15-minute. And I don't see it on the 30-minute, right? I don't. So 15 minutes is the highest time frame. So I'd want to, in either case, I'd want this 13-minute candle or 15-minute candle with 13 seconds left to finish, and candle body close below the second candle in this fair value gap sequence. That can kind of confirm to me that I'd want to take shorts. And until then, we'll wait. So what I'm about to say is something you'll learn just from sheer hours of looking at candlesticks. Like, if you've gotten your shots up and you have your 10,000 hours of just looking at price action, then you will begin to recognize this, especially since what I'm looking at is within the realm of my strategy. But sale price, we're testing both this inverse fair value gap and this 1 hour bullish. Okay, we're testing it. Now, a lot of times people will see this and price will create confirmation even on the low time frame. Like, we'll see a 1 minute or even a 30-second, right? Maybe a 2-minute bearish fair value gap that we'll have one bullish candle slam right through, and to people they think, oh, that's confirmation. And surface level, that's true. I would think the same thing. But when on the high time frames, right? When on the 1 day, we're in a 1 day bearish fair value gap. When on the 4 hour, we're at the 50% and 61.8% range for Like that's the perfect spot for a retracement. Now price will continue in the dominant direction, which in this case is bearish. When we've entered that zone, when on the 15-minute and 1 hour, right, we can clearly see that NQ has created an SMT divergence in respect to the previous day high, whereas ES hasn't, meaning, so both have created the SMT, but ES hasn't taken out the previous day high, whereas NQ has. So those three factors are contradicting this very simple 1 hour bullish fair value gap, right? And then this 1 hour bullish inverse. That has a lot more weight than the bullish, right? Than the buy side confluences. So what people will do is they will take a long here. They'll temporarily be in profit. It'll look something like they'll temporarily be in profit until this 15-minute candle ends, which ends in 9 minutes. Once that ends, I think this 15-minute will still close. So the candle body of this 15-minute, right, the close, will still close below the second candle in this bullish fair value gap sequence. So it'll still inverse this bullish fair value gap, but it will definitely retrace. And what that'll do, it'll stop out the people who entered long by eventually slamming right through it. And very possibly filling all this 1 hour liquidity and just hitting this previous week low, which is resting right below this intermediate low, right? This is something you'll see happen where people who've entered longs get stopped out because they're not looking at a high time frame and they're not seeing that price has every right to not respect a fair value gap, an order block, a breaker block, an inverse fair value gap. It has every right to not respect it. Okay, just because I'm charting all of this on the 4 hour, the 1 hour, it's important for visualization, but that doesn't mean that price is going to bounce at every one of those key levels. No, sometimes, especially if there's a lot of it, like it's redundant in the liquidity for one side, like buy side, it's stacked on top of each other. Price is going to be like, hey, let me just fill all of it. Let me just clear all of that liquidity and then go to the next level, next key level, right? And that, I think, is what's happening. And that especially happens when the high time frame is leaning very heavily to one side. And I think it is. We're going to go with our gut on that the 1 day has entered that bearish fair value gap, SMT divergence on the high time frames, and then for Fibonacci, we're on the 50% and 61.8% range. So we're going to still wait the 7 minutes for this candle to finish. And then I think we're taking shorts. So, I mean, we're dumping pretty hard. I said that the 15-minute might close somewhere around here and then we'll retrace back up. You know, there'd be an opportunity for shorts and then we'll take out this previous week low and intermediate low, but I guess I'm wrong. What's good is that this strategy that I'm trying can still carry out, right? It doesn't feel ideal because it's like price is already taking out this high time frame 4 hour intermediate low, but it's like you have a bunch of liquidity to fill. Like price could very well take out previous day low. It's very often that price takes out previous day low, especially since like we have a 4 hour bullish fair value gap right here as well. So like this structure here is still acting as a magnet for price, right? Like price still has every right to take out previous day low. Not only every right, but like a decent possibility. It's just a little annoying to see, I guess, us this early take out our like 10-15 p.m. low where we had our 4 hour intermediate. Because now we're at a level where it's like, should we take longs, right? Yeah, so that's something a little tricky because now, look, this 15-minute candle is a fat 15-minute candle and it ends in 2 minutes. So the question is, you can pick one of three options. Do I want to enter at the candle body close, right? That's a pretty high risk trade, especially since this 15-minute might want to retrace back up here to where we broke structure from this candle, right? So this candle would be considered a breaker block candle. Do we want to return to that breaker block, filling this perfect 15-minute bearish fair value gap right here? Do we want to return there and then continue our downtrend? Or, so that's option number 2. Or is the fact that we have taken out this intermediate low confirmation that, hey, it might be time to take longs instead of shorts? And there is a right answer. And I'll tell you what that is. Entering shorts off the candle body close is not smart. Okay, it's not smart at all. Not on a high enough time frame like the 15-minute. Okay, if you're talking maybe 1 minute, 2 minute, 3 minute, maybe 5 minute, 5 minutes pushing it, then sure. The reason why 15 minutes is a problem is because it's a higher time frame. There's more candles that make up the 15-minute time frame, which means there's a larger range in terms of points. So sometimes even trading 1 micro is too much risk. If you're risking 500, for example, which is decent risk. So it's a little difficult to manage risk on entering at a candle body close when the candle is this high volume, right? So scratch number 1. Number 2 is the correct answer, which is you wait for a retracement to some kind of continuation zone, right? Something that's telling you, okay, we've entered a low time frame bearish fair value gap, or price is confirming at this 50% level, like this 15-minute is coming 50% of the way through its candle body, which is a discounted entry, and then you enter off of a 1 minute inverse fair value gap. That, like, something like that is good, right? And if it doesn't pull back, then that was still a safer option than if it continued down here and you entered at the candle body close. Option 3 is absolutely ridiculous because it depends. Actually, option 3, we'd have to wait 15 minutes for this candle body to finish, because let's say this candle body finishes above the wick of this first candle in this fair value gap, then that will be clear that we have resisted this intermediate low. Like, we are respecting this 4-hour bullish. But if the candle body on the 4-hour closes below this wick, like if it's a full close or close to a full close, just think about it. I mean, that's a high volume candle that looks incredibly bearish, and you're telling me that it's sweeping the intermediate low, that we're respecting the 4-hour bullish, especially if it closes with that high of a volume? Absolutely not. No. What's going to happen is price might pull back, and then you enter a continuation trade, not a reversal trade. So bulls are out of the question. I mean, you can very clearly see today's a short day, and the fact that we're even entering this 1-hour inverse fair value gap is insane. That's insane. I think the level that we're looking to take out are these 3 levels right here: previous day low, this liquidity right here, and then this 4-hour bullish fair value gap. Those are the targets for the day, which I think we have a decent chance of hitting. Now, this inverse fair value gap might be just enough liquidity for price to temporarily pull back, especially since the 15-minute just ended. So let's see. I kind of want to do fib on that right there. Like, it's almost as if this candle right here is acting as a breaker block. So we're going to mark that. See what I'm saying? So, like, I think if we retrace over here, I'd be cool with taking shorts, because we've entered the 50% and 61.8% retracement, which is more than 50% of the way through. So that's pretty, I would consider that discount in this context. Plus, we'd have entered the breaker block zone. And on top of that, I mean, we're very clearly bearish. I mean, we're looking for shorts. So until then, until we kind of pull back into that area, I'm going to keep it at this. Now's a good time to just quickly compare it to ES before I pause and resume in a minute. Let's pull up the 15-minute for both. Okay, so yeah, this is interesting. This is something I definitely have to keep an eye out for because the 4-hour ends in 11 minutes. If we end up taking on previous day low on ES and we don't end up taking previous day low on NQ on the 4-hour, that could change the entire daily bias. Right? We could be bullish. We could be bullish, and that would be crazy. So it's possible. I'm kind of hoping that we don't do that, but it could happen. I mean, it could happen very soon. Yeah, we're like right there. If that happens, honestly, I might have to look for longs. So I'll pause in the meantime. Okay. I'm feeling confident about what trade to take here now. This is kind of where everything's coming together. So for context, ES, we're going to take out this low. I mean, we have 6 minutes. I'm very confident that we'll take out that low. So I'll just let you know if we do. But on the 4-hour for NQ, it's very unlikely. Remember what I said, like the candle body should kind of close somewhere up here on the 4-hour for it to be considered us respecting this 4-hour bullish fair value gap and this intermediate low. Okay, but the point differential from here to here is 474 points. It's not happening in 5 minutes. So this is just confirmation that we have a crazy high volume bearish candle that's disrespecting this 4-hour bullish. So what's going to happen is an SMT will be created. Like, okay, ES just took out previous day low. An SMT will be created. I don't think NQ will take out this low. I kind of hope it doesn't. That would help my explanation. But what's going to happen? An SMT doesn't always mean that, okay, the entire market has flipped and now we're taking longs. No, it could just mean that an SMT is now generating enough liquidity for price to make a deep retracement to then enter a position to continue in the dominant direction, right? So NQ had not taken out this low, ES will. That'll create a deep enough, or that will generate a deep enough retracement like up here for us to then enter shorts and then target previous day low or target this liquidity or maybe even target this 4-hour bullish. That's what's going to happen. And still 4 minutes left. Yeah, I think shorts are guaranteed. We're really respecting that Fibonacci tool zone, the 50% and 61.8, and the 1-day bearish fair value gap. Like this could even take out these lows over here. It could. It very easily could. I'm just going to mark it here. I'm not sure if we're targeting that today, but it could at some point, like tomorrow, very easily. So now we'll leave it at that, and I'll resume when that 4-hour finishes. Okay. 4-hour has finished. Now, like I said, all right, we created a high time frame SMT divergence, a bullish one. And just because we have a bullish SMT divergence doesn't mean we're now taking longs. No, it means that we're retracing deep enough for us to take shorts and then continue bearish. That's what we found out, especially after seeing this massive candle. I mean, come on. So now it's a question of where do we enter our shorts? So the Fibonacci tool got dragged down a little, but this is the start of the downtrend. This is the beginning of the uptrend. This is our 50% and 61.8% range. And we have a 3-minute bearish fair value gap right here, which also ends up being a 2-minute intermediate high within that bearish fair value gap. And turns out that is resting in the 50% range. So shorts right around here sound like a good idea. And even if we get like in terms of confirmation, since we're very high liquidity and price just wants to tank, even if I see a 30 second inverse fair value gap here, even a 1 minute 30 second, I will take it. I will take it. I'll take shorts. So we'll just wait for price to kind of reach that level, and until then, we'll leave it. And if we don't create a 30 second or 1 minute inverse fair value gap here, but I see like a high resistance candle, I'll consider it. But ideally, I still want to wait for confirmation, right? Because we could retrace as deep as up here. Like, who knows? Even though it's very unlikely, we want to ideally look for some kind of confirmation. So until then, we'll wait. I did consider, like, what if we do a shorter pullback? Like, what if we enter this right here? And I think this is like the fake out, or not fake out, but like the less likely fair value gap, this 3 minute one right here. I just like the 3 minute one up here a little more because it rests at that 50% range, and it also ends up being a part of the 2 minute intermediate high. The 3 minute here on the 2 minute ends up looking like a continuation sequence, which is why I don't love it. But I'll have it marked, right? We'll have it marked. Yeah. And let's just leave it at that. I'll wait for price to kind of reach that level, and then I'll resume and decide when to take shorts. Okay, like I said, price has entered that 3 minute and 2 minute intermediate high, right? 2 minute intermediate high, 3 minute bearish fair value gap. Now I'm just looking for a 30 second inverse, and we're good to go. Yeah, so I'm really just looking for price to slam through that right there, and then we'll take our shorts. In terms of what on earth? Hold on, let me refresh. I'll be right back. Okay. Yeah, so this candle body didn't close below the open of this bearish one, so I'm gonna wait for this one to close first, and then I will I'll take my shorts. We're very heavy on the confirmation. I'm gonna make sure of it. Second, that kind of pulls back a decent bit. I'll make sure to.
Order filled.
That's decent. Yeah, I'll take that. I don't mind that close. All right. Now we sold 3 micros. So the point differential from here to here, it's 200 points. 200 times 2 is 400. 500 divided by 400 is less than 2. It's just a little over 1. So 300 is good risk. Or 300 is, 3 micros is a lot of risk if this is my stop loss. Now, if I just pick the prior high, it ends up being perfect. The amount I risked for no more than $500 loss, right? So we have 115, about 100 points, 100 times 2, 200, 500 divided by 200. It's a little over 2 micros, right? It's about 2.5 micros. So that is I guess 3 units is a little more than I should have risked. I think 2 would have been a good amount, but we're playing it out. Let's keep it at that, and then I'll resume in a minute. All right, so stopped out, just like that. I think as more time surpassed, I mean, this is clear consolidation right here. Like, we're almost close to this 1 hour candle finishing, right? It's 10:52 a.m. When this candle finishes, we could very easily just like test this bearish fair value gap all the way up here and then continue our downtrend, or not at all. Like if you pull up ES, we could just be ultimately bullish right now. We could be ultimately bullish. I mean, look at where ES is at, right? Like ES, maybe if ES takes out London high, then, while NQ doesn't take out London high, that could be a bearish SMT, and then we can continue our shorts because macro, we are still in that 1-day bearish fair value gap. It could be any of those things, but yeah, it's like I did think about staying in this trade, especially since we stopped out just now, like so close to the 1 hour finishing, that hey, let me just wait for the 1 hour candle to finish, and then we'll obviously just enter that one hour bearish fair value gap and then continue bearish. But honestly, like, I don't know that, right? I can't. That's a gamble. That's me rolling the dice on us respecting a fair value gap when we couldn't even respect the 15-minute one. We couldn't even respect the 5-minute one. We couldn't respect the 3-minute one. We couldn't respect the 3-minute one in tandem with my 2-minute inverse fair value gap, which is why I entered. Or my 30-second, my 1-minute, my 2-minute, all of them. So how can I now rely on the 1 hour bearish fair value gap that hasn't even happened yet, that still has 6 minutes to enter, and in those 6 minutes, price could slam all the way up here and I could be negative $2,000, right? So we don't do that. That's kind of where FOMO and greed come into play. So we'll take the loss. I still do think that this low will be taken out today. And we'll wait for that. But yeah, a lot of lengthy trading days this week. This is one of the more difficult weeks that I've been trading, but I've been proud of our patience, and I've been proud of my patience and how I've been waiting, even if it takes an hour to enter a trade, and also being very on point with when I stop out. So yeah, that's it.